Good morning, or actually good afternoon, and thank you for joining us. With me today are Deputy Auditor Generals Janet Chickychop, Gordon Denlinger, and Peggy Morningstar, Senior Audit Manager for the Bureau of Performance Audits. And it was Peggy's team that performed the audit that we are talking about and releasing today. And I want to thank each of you for working on a very complex audit regarding a very sensitive issue. So thank you very much for that. And for years, there's been concerns raised to us from the General Assembly and from residents about school districts who are raising taxes while seemingly having enough money in their reserves to cover any type of budget gaps. For nearly a year, our audit team looked in this practice to see whether school districts appropriately used referendum exceptions to raise property taxes without voter input, and whether school districts were using the general fund balances the way that they're intended. We selected 12 school districts for this audit for fiscal years 2018 through 2021. The districts include Bethlehem Area School District in Northampton and Lehigh County, Hempfield School District in Lancaster County, Neshaminy School District in Bucks County, North Allegheny School District in Allegheny County, Northampton Area School District in Northampton County, Abington School District in Montgomery County, Canning-McMillan School District in Washington County, the School District of Lancaster in Lancaster County, Lower Merion School District, Montgomery County, North Penn School District, Montgomery County, Penn Manor School District in Lancaster County, and Westchester School District in Chester and Delaware counties. These districts represent a cross-section of Pennsylvania communities, from urban to rural, from wealthier to poor tax bases. What puts them all in the same category for the purpose of our audit was they all applied to the Department of Education for referendum exceptions to raise taxes. During our audit, it became quickly apparent that these districts found a way to use the law to their advantage so they could always raise taxes. Basically, it's a shell game. To meet the legal requirement to increase taxes, school board members voted to move and earmark unspent money, giving them the legal ability to raise taxes every year without voter input. Then they used a clause in another law meant for extreme fiscal circumstances to ask the Department of Education for a referendum exception to raise property taxes above the inflationary rate for things like special education and pension obligations. The district, of course, meets these obligations, so the Department of Education grants the request. The unused money then sits in the bank for a rainy day that may never come, and taxpayers never get the opportunity to vote on a tax increase. These 12 school districts collectively raised taxes 37 times during the 4 years we reviewed, and each district applied for a referendum exception at least once. And there are some startling trends here. Each of the 12 districts had sufficient unused funds that made some of the 37 tax increases unnecessary. Also, applying for a referendum exception was used as a regular budgeting tool rather than an extreme measure. And all of them applied whether or not they intended to use the measure or not. It was a common practice for school boards to vote to move unspent funds into other funds while increasing taxes. During the audit period, the districts moved $102 million more than they budgeted into their capital funds. On top of that, at the end of the audit period, the 12 districts collectively had $390 million in their prospective general funds accounts that is sitting unspent. So how does this happen? There's a loophole in the law that makes all this legal. The legislature intended for the Public School Code and the Taxpayer Relief Act to give Pennsylvanians property tax relief and a greater say on how their money was being used by school districts. But this isn't happening. The Department of Education sets the standards for applying for a referendum exception. However, these applications are based on budgets, not on actual cash. The school districts told us they must develop their budgets this way because they never know how much funding they're going to receive from the state. But at the end of the day, it's the taxpayers, those especially on a fixed income, who are carrying this burden. So what can we do to change this? Our auditors have a series of recommendations that can make a meaningful impact for taxpayers and school districts alike. First, the legislature needs to close the loopholes in the law that allows these practices to continue. For instance, if the law was changed to base tax increase calculations on unrestricted funds, only 5 of the school districts in this audit would have been eligible to raise taxes 11 times during the audit period. Instead, all 12 districts being eligible to raise taxes 48 times. Next, the legislature can consider changing the fiscal year for school districts from June 30th to September 30th. If school districts are telling us they need more time to get their budget together and to have a balanced budget, well, we need to listen to them. Changing the fiscal year would give them 3 months to plan a budget based on known data from the state. And finally, the Department of Education needs to revise its guidelines for granting a referendum exception. These guidelines should be based on actual cash in a district's general fund and whether it has spent its unused funds. And we must require school boards to use excess unrestricted funds before they can even apply for a referendum exception. And these are just 12 school districts. There are 500 in Pennsylvania. If this is the standard operating procedure for these urban, rural, and suburban school districts, it's not a stretch to say that it's not happening throughout the Commonwealth. And at this point, doing nothing is simply not an option. We all want to provide schools with the resources they need to effectively and efficiently teach our children. And we are willing to do our part. But we simply cannot allow school boards to use legal maneuvers that take away the voice of our taxpaying citizens. This is an opportunity to restore the original intent of the Public School Code and the Taxpayer Relief Act, and to provide real property tax relief for our fixed income senior citizens and for our hard-working families. We look forward to working with the legislature and the governor to making sure that this happens. Thank you. I'll open up for any questions. Yes, Dennis.
General, did you audit 12 schools and found all 12 to be doing this? Or are there only 12 in the whole state that are doing it?
No, we audited these 12
and found all 12 to be engaged in this?
That is correct.
So there could be more. There's likely more.
But potentially. But we specifically looked at these 12 schools.
Is that something you're going to continue to look at as you audit every other school, just as you do every year?
That is something that we are currently considering, yes.
Just to be clear, this is legal.
It is legal. However, the problem is it's not necessarily transparent. As I stated earlier, they used the law to make it transparent, to make sure that it wasn't transparent. The bottom line is, if you're going to raise taxes, then it's the taxpayers that need to say whether or not that's something that can happen. In this case, it's something that, in fact, wasn't done. They used the law to their advantage. That's basically what it was, because they could. And that's why one of our recommendations is that the general legislature has to do what they need to do in order to close that loophole. Yes?
Is your concern primarily just about the unrestricted fund balances, or is it the assigned? I know there's 3 categories of fund
Right.
balances. Is it they're moving money into the unrestricted, or are they moving money into the other 2 fund balances that are supposed to be obligated for?
Our issue with this, and again, we've made recommendations to the legislature, to the Department of Education, and also to the school boards themselves. Basically, moving money from one account to another to give the appearance that you don't have as much money in one account, which would allow you to get this exception from the Department of Education.
And, I mean, do you think PDE was doing its job and, making sure that the districts that requested these exceptions were actually meeting the standard for being granted?
Well, we didn't audit PDE. One of the recommendations that we do have is that PDE changes their requirement with regards to who gets a referendum exception. And also, when they do that, instead of looking at budgeted funds, that they actually look at cash on hand.
With all cash on hand and all.
Well,
the
cash
fund
in hand specifically in the general fund, because it's the general fund that we're talking about.
So to be clear, you're saying their general fund budget, the school districts, they were moving money out of that to other locations, so that, I believe you said they're reserves,
Right.
with the intent of saying, hey, look at what our general fund balance is.
Right, and I'm gonna let Peggy go into a little more detail with regards to that.
Thank you. So to answer both questions, the general fund includes different types of funding, right? You have the assignments and the commitments and the unassigned funds. All 3 of those are considered unrestricted funds. So if they move it from unassigned to committed or assigned, it's not counted towards the Pennsylvania school code's threshold, and they're allowed to raise taxes every year. So does that help where you were going with that?
It was my understanding that it wasn't, that to move money out of, from one of the most restricted, and I forget the name of it, account that the school districts have, that it required, it wasn't like the school board could just say, okay, we're going to move. It took like the state to approve moving money from one account to another. That it's not all just like within the school district's discretion to be moving this money around. I think it's like the committed funds that might be like for a real estate, a construction project.
So we did an audit of the general fund, not the capital funds, which is for capital improvements and property that you're referring to. So they're designating funds or they're transferring to those capital funds so that they can meet the threshold to raise taxes every year.
They can't move it back out of the capital fund back into the general fund. It's
Correct.
It's just a one-way go.
And you did 12 school districts, and all 12 are engaging in this.
It's an
So-
audit of the 12 school districts, so every audit procedure was done at each district.
But it all found the same, they're all engaging in the same behavior.
Yes.
So what can we extrapolate from that with 500 school districts? The word is out. Clearly, people know to do this, right?
Well, one of the things that, as far as any type of extrapolation, you can guess that, but we don't plan on using extrapolation. And sometimes in the auditing world, extrapolation is a 4-letter word. So one of the things that we plan on doing going forward is do audits the same way that we perform this one, as opposed to using some type of extrapolation.
So isn't there, there is a law in place that limits how much money they can have in these unrestricted.
Right, and correct me if I'm wrong, that's why funds were moved.
It's
That's
like-
why
I know
funds
it
were-
depends
that's-
on district sizes, right?
Right, because if you have a certain amount of money in your general fund, you're unassigned, then you cannot raise taxes. But what they were doing, they were taking, when they had plenty of money in those funds, they would then take those funds, move them elsewhere. For example, they would move them into capital projects, even though they had already budgeted enough money for capital projects. So they move it into capital projects and say that, hey, look, we don't have enough money in our general fund, we'd like to raise taxes, and not having to go to the taxpayers saying that.
Who's the "they" doing this? School boards or specific at school?
The school boards that we had mentioned.
Say that again?
The school boards that I mentioned earlier in this interview are the ones that are doing it.
I mean, you talk pretty clearly about them intentionally doing this as, what are the motives here? Why, what did you-
Well, from what we've been told from the schools is that because they have to have their budget submitted by June 30th of every year. And the state budget has to be submitted on June 30th of every year. They never know how much money they're going to get from the state. And that was something that was clear and across the board for all the schools. So one of the recommendations that we had is that, okay, if that's the case, you should know June 30th what funding you're going to get. Move the date where you have to have your budget in, move it to September 30th. So by then, they should clearly know how much money they're going to receive from the state. And that was probably their biggest concern.
From your view, who's the victim here? Just the taxpayers who have no idea, thinking their school doesn't have as much money as they actually do?
Yeah, and also you have to look at people on a fixed income. I mean, imagine somebody a senior, who owns their home, and they have to write out a check to the school boards every year. And they don't have enough money to get a crown on their tooth. They don't have enough money to get their medications. And they're writing out a check to a school district where they necessarily don't have to write a check out to. Those are the ones that we're talking about. Those are the ones that are hurting. The average, everyday tax-paying citizen on a fixed income. That's who we're talking about, who's getting hurt.
Can I ask you to repeat what it is, the revisions to the tax referendum exceptions guidelines that you're recommending?
That we're recommending? So there were a couple of them. So were we talking about where I mentioned that for the Department of Education's referendum exception, where it should be based on actual cash as opposed to the budget?
Right.
Yeah, because a budget is a budget. A budget is a educated guess with regards to how much money you're going to spend. But if you look at the actual cash, that's the actual cash that they have on hand. So, it would work to know how much money they actually have on hand, as opposed to a estimated budget.
And that actual cash in hand includes the unassigned.
It would include all that. It would include anything that would be included in their financial statements should be considered. And the actual cash is something that's included in their financial statements. So basically what we're saying is look at the actuals as opposed to the budget.
You believe this could be a statewide, you've got these 12 here, but you don't believe that they're probably the only ones.
Well, the fact that we did 12, and all 12 are doing it. And I'm not going to sit here and say that all the other school districts are doing it, but there's a pretty good chance that a lot of them are.
Thank you very much, General.
Thank you. Thank you, everyone.